Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. The restaurant service industry took a beating during the 2020 health crisis, and some wonder if it would ever fully bounce back. It has, at least for those restaurants with strong brand recognition that change with times. This includes today's income pick, Wendys Co, traded on NASDAQ under symbol WEN. In 2020, the US restaurant industry finished the year with total sales of $659 billion. That's $204 billion lower than 2019's $863 billion in sales. Things have been slowly turning around, though. In 2024, sales are projected to top $1 trillion for the first time in history. Not every restaurant will ride the wave. Restaurant owners are using the technology more to tackle strong competition, reduce labor, cut costs, and boost business. Thanks to high inflation and record high U.S. household debt, nearly half of U.S. consumers are more value conscious than they were before. On the plus side, 9 out of 10 adults say they enjoy going to restaurants. John?
Yeah, and I think a restaurant offering good deals could bring in customers out of the shadows, and that's where Wendy's comes in. The Dublin, Ohio-based company operates, as most people know, develops and franchises around 7,000 quick service or fast food restaurants around the world. The company is best known for its made-to-order square hamburgers, and if you're feeling really adventurous, you can also always dip their french fries in the frosty dessert.
Let's talk numbers here. How did this company do in the first quarter?
Well, digital acceleration, a growing footprint, same restaurant store growth, and an advertising blitz, along with industry tailwinds, are helping Wendy's report pretty solid financial results. First quarter sales inched up a little more than 1% year over year to 534.8 million. Global same restaurant sales growth was around 1%. Now, first quarter net income actually climbed 5.5% to 42 million or $20 per share. Burger chains adjusted earnings per share beat analyst estimates, jumping 9.5% to 23 cents per share. The positive results led company president and CEO Kirk Tanner to say that momentum it built across its business in the first quarter put it on track to achieve its 2024 outlook. And for 2024, the company expects to report global system-wide sales growth of between 5 to 6% and adjusted earnings per share of 98 cents to $1.02 per share.
John, we usually don't think of restaurants as big dividend payers. How are dividends looking here?
Yeah, restaurant stocks tend to get overlooked when it comes to dividends, probably because they're not as defensive as other sectors. And the 2020 health crisis certainly proved that. Though more well-recognized chains like Wendy's were able to maintain their dividends throughout the health crisis. In fact, thanks to its history of strong free cash flow, Wendy's has actually paid a dividend for 22 consecutive years, and it's actually raised its payout for the last 4 years. In early May, it declared a quarterly dividend of 25 cents per share or $1 on an annual basis, and that works out to a current yield of 5.22%, which is more than twice its 5-year dividend yield of 2.49%. Now, while high dividend yield often comes at the expense of a low share price, that isn't the case with Wendy stock. It's currently trading at, as of this recording, at around $19.50, which puts it up 6.5% over the last 6 months. And now, while Wendy stock is down from its June 2021 record high of $26.73 per share, Wall Street actually believes Wendy's has what it takes to hit fresh highs over the coming quarters, with analysts providing a 12-month share price target of $21 per share to $29 per share.
John, thank you so much for your insights. Wendys Co is the second largest fast food restaurant in the US and one of the most recognized quick service restaurants in the world. Despite a tough economic climate, it was able to report decent financial results, which included adjusted earnings beat and a global same restaurant sales growth. While inflation and high prices are keeping some customers at home, Wendy's noted that the first quarter digital sales jumped 30%, with loyalty membership growing 40% to 6 million after a big March Madness promotion. These initiatives help management maintain its full-year guidance, which includes growth in global sales, adjusted earnings, and free cash flow. The company uses its free cash flow to pay dividends, buy back its own shares, and reduce its debt. As a result, Wendy's should be able to continue to provide shareholders with reliable, growing high-yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.